Gene, great to have you with us, and you've been on both of the calls. I don't know how you do it. But from Apple specifically, you're saying that they're being a lot more specific about things, which is a good sign.
Yeah, Melissa, if we go back to 2019, that's the last time they would give like really detailed iPhone guidance. And then, of course, during the pandemic, they pulled that. And then they kind of started to slowly give more guidance, but not to the product level detail. And here we are, they're giving more guidance, part maybe because they've got more to talk about. They're more excited to talk about double-digit growth. If you look at the iPhone, for example, over the June and the September quarter, and then you take their guidance for December, it's going to average to about 10% growth. Now, that compares to the iPhone being down over the previous 2 years, an average of 0.5% per quarter. And so I think, yes, we're seeing more color, and maybe from them just feeling that they want to tell a story because things are getting better. I guess it's neither here nor there. What matters is they're okay being more on the hook. I think it is a sign that they're feeling more confident about their business.
For Amazon, Gene, it's up 14, 15% after hours. Is that justified?
I don't know if that kind of move is justified. I think the piece that really is surprising people is that they're talking about this backlog. The CapEx side, just to kind of put it, I think it's important because that's an A topic. But the CapEx piece, they did mention the numbers, to put it in perspective, is about 6% higher than what the street had been thinking before. So that was the guide up in CapEx. But as far as kind of that move, it's in part because of that backlog comment, that their backlog is bigger for the December quarter than the revenue was in the September quarter. Of course, December is their big quarter, so that kind of makes sense. But that is really a bullish sign. I think the street's probably going to shake out to something in the order of 20, 21% AWS growth for the December quarter. And I think that that's what's driving it. The simple takeaway is that I think Amazon has not performed that well. We're seeing a little bit of a recovery here. The results were solid. The outlook is solid. But I think that in its totality, there's better companies. I think Apple's going to significantly outperform Amazon from tomorrow morning, wherever they open, to the end of the year.
Wow, I like that.
What, the call?
Yeah.
It's a bold call.
Gene's the man.
Yeah.
All right, Gene, really quickly. So Amazon right now, if it opens here, it's going to gain, what, $200 billion in market cap. And, you talk about this Anthropic relationship all the time. A guy that I know is a brilliant tech investor, Josh Wolf at Lux. I think the other day he said, if I was a betting man, I'd bet that Amazon eventually owns Anthropic. Are we going to see M&A, $200 billion plus? Okay, we just heard OpenAI or some reporting that they are targeting $1 trillion IPO at some point in the future. The numbers are getting kind of staggering. Do you think we will see any of these big incumbents make acquisitions like that in the private markets?
I think if I was going to say on a scale 1 to 10, the desire for Amazon to pay $200 billion for something like Anthropic is high. It's a 10 out of 10. I think they have to do that. They've got to add some substance to what they're building around AS and create some unique products that even pull in more AWS revenue. Google, Gemini, and Azure's been successful at that. The one piece, of course, is will the regulatory environment allow that big of a deal? I don't know the answer to that, but I do know that if you look around the table, there's not that many seats that have these large language models. You have Anthropic, you have Grok, you have GPT with OpenAI. So they're going to be highly sought after assets, and my sense is we're going to see some pretty profound M&A over the next couple of years.